Software stocks were the darlings of the market. Now they're under pressure. Multiples have been cut almost in half, and not because earnings collapsed. The real question is bigger. Does AI permanently change the value of software? And if it does, who are the winners? Over the past year, software hasn't just drifted lower. It's been aggressively repriced. A year ago, the sector traded north of 50 times earnings. Today, it's in the mid-20s. That's not normal volatility. That's a reset. And what makes it interesting is that earnings haven't fallen apart. Growth expectations are still mid-teens over the next couple of years. So this isn't about recession. It's not about rates. It's about terminal value. For the first time in years, the market is questioning whether AI weakens the moat around software businesses. Goldman outlines 7 main risks. Not all of them are equal. They score each one from 1 to 5, with 5 being the highest. The first risk is rip and replace. AI wiping out systems like SAP or Oracle. That's a 1 out of 5, low risk. These systems hold core enterprise data. They don't disappear overnight. Where it gets more serious is value abstraction. AI agents sitting on top of the stack and capturing the economics. That's a 4 out of 5 risk. Even if the software survives, the profit pool can shift. There's pressure from horizontal platforms competing with vertical specialists. That's a 2. Lower cost of code making it easier to build software. Another 2. Enterprises building internally instead of buying. A 3. Margin pressure from inference costs. The LLM tax. Also a 3. And then there's the biggest one. Uncertainty. The pace of innovation is so fast that the end state is hard to predict. That's a 5 out of 5. And uncertainty compresses multiples. But here's what matters. The market isn't treating all software the same anymore. The divergence has already started. Companies leaning into AI are seeing stronger earnings revisions and better margin trends. Others are stagnating. And near term, AI is mostly a cost efficiency story, not a revenue explosion. Goldman formalized this split. They separated software into what they consider high quality and low quality names. On one side, AI enablers, infrastructure, data platforms, security, and hyperscale cloud. Companies that benefit directly from AI usage. On the other side, workflow software that AI could automate or rebuild internally. And the separation is already visible. Sales in the stronger basket have doubled since 2023. The weaker basket has stalled. This isn't software collapsing, it's software fragmenting. And fragmentation creates opportunity. At Option Circle, we've taken Goldman's high-quality group and built our own focused basket around it. Now we're filtering within that basket, looking for the names that start to turn first. Because leadership doesn't come back all at once. It shows up in pockets. The stocks that move early often tell you where capital is rotating next. And when those leaders begin to stabilize and push higher, that's where we look to structure defined risk call positions, aiming for asymmetric upside. You don't need the whole sector to recover. You need the right names. If you want to see the full list of Goldman software winners, head over to Option Circle and check out my focus list. Membership access is free and takes just a minute to set up. Take a look, and I'll see you inside.